Welcome to Searching for the Question Live. My name is David Orban. I'm very glad that you are here following the show. We are live on YouTube, Facebook, Twitter. Feel free to send your questions and comments as together with my guest, we get into hopefully interesting areas and threads of today's theme. But before we start, I would like to invite you to, of course, subscribe to the show on YouTube so that you can get alerted about forthcoming episodes, and to join our Discord community on davidorban.com/Discord, where you can text chat, but also voice chat and video chat, both with me as well as with other members of the community. Once again, learning about what are the themes that we cover, and also just suggesting new guests or what we should be talking about in future episodes of Searching for the Question. And of course, if you like the content that together with my team I create, I invite you to become a supporter on patreon.com/David Orban. So today we are going to talk about fintech and the future of banking. I'm pretty passionate about cryptocurrencies and Bitcoin, but of course, we have a huge existing financial infrastructure that we cannot afford to lose before we fully embrace whatever cryptocurrencies and blockchain is going to bring in the next years and decades. And what we need instead is to modernize it, to make sure that the features and the services that the financial system provides correspond to what we need. And we are going to talk about this as well as other complementary topics with my guest of today, Brett King. Brett is an Australian futurist, author, and the co-founder and chairman of Moven, that is based in New York, and it's a company offering software platforms, especially oriented towards smartphones and mobile interfaces to banks. And he's an influencer in financial services, wrote a gazillion books that we are also going to mention for sure. I have one of his latest with me right here, Augmented. And let's welcome Brett with us today.
Good to be back, David.
Hey, I can hear the protest.
The protest
revolts, and then getting into uprising and revolution. Are those the next 4 phases?
Yeah, maybe. I've got my boring company, not a flamethrower, ready just in case.
Okay, that's good. Keep it close. So how are things in New York? Whatever the current crisis, pandemic, check. Civil disruptions, check. Locusts are next. I don't know.
The East River hasn't turned into blood yet, but I'm waiting for that one next. It's we're safe, we're well fed. Things could be worse, but obviously there's a great amount of uncertainty right now. We have a vacuum of leadership nationally in respect to trying to get some trying to calm things down, and so the potential for escalation, unfortunately, is pretty strong. There's a whole range of other impacts more broadly, both globally and nationally here in the US as a result of the economic effects of all of this that will take a lot longer to repair than the protests and the riots and even the coronavirus response. But I'm sure we'll get into that.
So tell us a little bit about you. How did you end up from Australia in New York or wherever your various bases are? Because I know you have one of the bases in Thailand, and you would like to be
I'd
able.
love to be there right now for sure.
It is probably safer
Yes.
and more stable than
Magnitudes
in the
safer.
US.
Yeah, so I've been offshore for 20 years, even though I'm Aussie. I spent almost 7 years in Hong Kong, 4.5 years in Dubai, and I've been in New York for about a decade, just over a decade actually. And so I do feel much like yourself, David, that I'm a citizen of the world. And I'm in the Lower East Side.
All right,
So
let's fly
yeah. I'm a little bit south of where you're looking right now, but
we don't need to zoom in on your home. Right? Keep it safe and secret.
yeah. So around that area. I left Australia in '99, and I've been sort of traveling the world ever since. But I started as a technologist. So I was a byte ripper in the early days, a coder. And then sort of migrated into sort of project management for large scale technology projects, sort of became a architect and sort of project manager in the space. Had my own companies. Most of my career I've spent as an entrepreneur. I had a software business for the first for many years, initially, and then ended up project managing some very large scale projects for Deloitte, sort of SAP, ERP type stuff, as well as web. But really in the 2000s, I started to focus on the digital revolution. So internet based stuff. I owned an ISP back in '95. But by 2000s, I was really sort of an e-business guy. In Hong Kong at the time, managed some very large scale, online implementations for financial service organizations, the likes of HSBC, Manulife, the Canadian, life insurer, Amex, Citibank, others, Standard Chartered. I did their global.com strategy for Standard Chartered in 2007. So I was right at that nexus of, the financial services industry getting online. And that eventually, after the financial crisis, led me to writing my first book, Bank 2.0. I wrote a series of banking books, as you alluded to. Bank 2.0, Bank 3.0, Bank 4.0 as my latest in that. I did Branch Today, Gone Tomorrow, Breaking Banks, and with Alex Lightman, JP Rangaswamy, and Andy Lark, I produced Augmented, which was the best-selling book that I've done. Broader market, obviously, and it's sort of my attempt at sort of short-term sci-fi. I know you're a sci-fi fan too, Dave. So, looking at the next 20 to 30 years in terms of how technology changes society. It's all accelerated a little bit as a result of coronavirus, of course. And, the seventh book I'm working on is called The Rise of Techno-Socialism, which is sort of a sequel to Augmented. And it talks about more of the social structure and social order that's changing as a result of coronavirus, dramatic inequality, the impact of artificial intelligence on employment, and then eventually how climate change is going to change that. So we've got some great contributions, forward by Arnie. We have Jack Ma, who's contributed to the book. So it's coming together really nicely. But and my co-author on that is an economist, Richard Petty, Dr. Richard Petty, not the racing car driver, but Dr. Richard Petty out of Hong Kong. And we've known each other for 20 years, so it's great to be collaborating with him on that as well.
And you told me that reality is catching up very fast with the short-term sci-fi. So as a consequence, it is likely not to come out in July, but instead be pushed back a little bit, right?
Yes, it's probably going to be October, we think. The reality for that is if you think about we talked about economic structures are going to need to support the changing social conditions, as a result of AI and large technology unemployment and climate change disrupting coastal cities and things like that. And we talked about the need for universal basic income to soften the blow of those changes. Now, we put a whole business case together showing why UBI could work and would be required, and then suddenly we have coronavirus and Spain announces UBI and the US does and UK does stimulus payments and things like that. So obviously the arguments that we had were had to take into account that now we have a real case of where this sort of social safety net would be required economically. But there's other elements as well. Part of the protest we're seeing in New York these days, while we can relate it back to the death of George Floyd, part of the issues we're facing in the United States is the most severe economic inequality in the US's history, and so that inequality can't be excused away. A lot of the problems the US has today are at their grassroots economic inequality, and so you have to fix those problems to solve these types of issues we're seeing in the US on a longer term basis.
And I am absolutely interested and fascinated by how technology impacts society, and as a consequence allows society to evolve and fulfill ambitious moral aims that we feel and share, but are frustrated in not seeing being realized because potentially of a lack of technological development. So we will go back to that, but let's start from fintech and banking, also because those are very important technologies by themselves. Massimo Prezioso commands us for the topic. Alex Lightman says hello and says,
"Hey, Alex,
happy to see friends doing videos together."
Yeah.
And Emiliano goes straight and asks about Bankera. Now, I happen not to know Bankera. I'm pretty sure, Brett, you do know Bankera, but I, of course, looked it up while we were here, and it looks like that Bankera is a kind of a neobank, just like we have N26, we have Revolut, we have many others.
In fact,
so Moven, if I understand,
we started as a challenger
provider of a software layer to one of these, right?
We were the first mobile challenger bank in the world. We launched in 2011. Actually, the domain for Moven Bank, as it was known back then, was registered in August 2010. And so we were the first mobile challenger bank in the world. Now, what does that mean? Well, we were the first mobile app where you could open a bank account in the app online. We were the first to do contactless payments. We were the first to do real-time receipts when you transacted at a store. We were the first to create, a different relationship with your money in the homepage of the app, where it showed you a spending meter to show and categorized your spending instantly to show, what was a good spending event versus a bad spending event, and coach you to save more money using gamification. All of that stuff we sort of pioneered back in 2011. Today, there's over 100 challenger banks globally. Some of the largest, or fastest growing banks in the world are challenger banks today. We've heard of the Monzos, the N26s, and the Revoluts, obviously, but yesterday, Nubank in Latin America, based out of Brazil, announced they had, for their 7th anniversary, had acquired 25 million customers, or reached the milestone of 25 million customers, which makes them, right up there with the likes of, Revolut in terms of size. But the largest challenger bank in the world is actually based in China. Not a surprise. It's WeBank, and they have about 200 million customers today. WeBank in China, and they're a massive player in the emerging space there. But the largest privately owned organization in the world, is actually, again, based in China around money, and that is Ant Financial. Largest privately owned entity in the world, worth in excess of $250 billion today, which makes them larger than Citibank, Deutsche Bank, many of the big financial names that we have. So fintech is no longer this fringe thing. It's infused in society, at every level. Fintech dominates payments today. Not only do we have TransferWise, and of course we have Bitcoin and cryptocurrencies and things like that. But last year, the two major mobile payments platforms in China, Ant Financial Alipay and Tencent WeChat Pay, between them did $41 trillion in mobile payments. Now, why that's significant is if you take all of the plastic cards in the world, MasterCard, Visa, Amex, Discover, etc., and you combine all of them, they did about $22.5 trillion in payments last year. So, mobile payments just out of China alone were almost double all of the remaining plastic card payments in the world. So what that tells us is that the future of the value store, the way we will transact on a day-to-day basis, is rapidly shifting towards the cloud, rapidly shifting towards the phone, and in the future smart glasses and voice, and that will be your dominant way of paying day to day. This wallet that you have in the cloud, not necessarily owned by a bank. It doesn't have to be anymore, and so this is a radical departure from banking of the last 700 years, since Monte de Paschi de Siena started in 1472, the oldest bank in the world, right?
I love this recent chart of how many clicks do you need to open an account, right?
Yeah.
From older banks that are 5-6 times as hard as the more innovative ones. Emiliano from YouTube is asking if we will have an Apple Bank, because the Apple Card today is not offered by Apple themselves, but it is in partnership with Chase, if I'm not mistaken. So, do you expect that?
It's actually with Goldman Sachs, with Marcus.
Oh, okay.
But you're correct. Yeah.
Yeah.
Look, I think if you think about this systemically, this is the way to look at it. Prior to 1990, when the internet emerged, and we started to have the first online banking structures, prior to 95, that was. Prior to that, the only way you could get access to banking was going to a bank branch, and getting access that way, signing a piece of paper. The only way you could access money was through an ATM or a bank branch. The only way you could have service relationship with the bank was either the branch or the call center. So banks monopolize the channels with which you could get access to banking. But if you look at it today, people use mobile banking 350 times more than they visit branches on an annual basis, right? And so there's no, it's not even close in terms of the fact that technology channels dominate day-to-day access to banking and surfacing of utility. Now, the big shift that's taking place as we, get more technology capability here, first of all through, smartphones, and then next gen through smart glasses and smart speakers, voice-based AI, is that utility that the bank has is being surfaced in much more frictionless, much more efficient manner. So the graph you showed in terms of clicks to open a bank account is just one part of where we're taking out friction from the banking system by looking at UX and experiences. ultimately, that also destroys the real value banks have had in the past with monopolizing access, because they become parts of the ecosystem at the back end, sort of the dumb pipes, as we often call it. But the experience has become led by the intent or behavior or other factors that are better expressed in a real-time environment. So you don't need a credit card to get access to credit anymore. You walk in a grocery store, if you don't have enough cash to buy your groceries, you'll immediately be informed on your phone or your smart glasses of a credit offer saying, hey, your salary hasn't hit the account yet, but I can help you buy your groceries today. So that experience shift leads us away from traditional bank players to more of the technology players acting as gatekeepers. I don't think Apple wants to be a bank. I don't think Facebook or Google wants to be a bank. But they may end up defining who are the biggest banks in the world by their gatekeeping.
One of the reasons they don't want to be a bank is because of the regulatory straitjacket that they would necessarily have to wear. And that is because the degree of disruption that technology could have had already on the financial sector was drastically slowed down by the regulatory capture that today the incumbents leverage in order to keep competitors at bay. And in the meantime, we have built a world of schizophrenic and paranoid obsessions where the KYCs and the UBOs and all the bureaucratic hoops that one has to jump through build an image of pretend compliance, while huge non-compliant activities are ongoing.
Absolutely.
As demonstrated even just by the ones that cannot even be hidden, and as a consequence, the banks get fined billions and billions and billions of dollars. And of course, the largest of these emperor naked issues, which is the inability of the regulators to prevent systemic risks.
Correct. In fact, I mean, I got two illustrations of that. First of all, AML, anti-money laundering. We're successful at eliminating about 2% of money laundering globally with the current legislation and regulations we have around the world. We're appalling at it. Despite spending over $400 billion annually on regulation associated with money laundering, we stopped 2% of it. I mean, that's in any business case, if you put that sort of investment into something and we're only 2% successful, you'd stop it. The other thing you talked about KYC. I joke that it stands for kill your customers with paperwork in the banking sector. But coming back to the fines and stuff like that, do you remember? You know Charlie Shrem, right? You remember Charlie from BitInstant, right? So I had Charlie Shrem come in and do my radio show the day before he went into jail for money laundering charges. Now, those money laundering charges were levied against him for BitInstant, or changing money for Silk Road and things like that. Charlie made some mistakes in that respect, but at the end of the day, he was charged. Laws changed to change the way cryptocurrency was categorized in the US system, and he was charged retrospectively for a crime that didn't exist when he started BitInstant. So there's a lot of funny stuff going on. But the day I had him in the radio show, the day before he went into prison, HSBC paid a $1.9 billion fine for money laundering in relation to their Mexico banking activities. So you've got these two worlds, like the guys starting to innovate and this sort of stuff. Charlie Shrem could never go to the regulator and pay a fine and get out of criminal time because the system sort of want to make an example of him. But that there's the fact that so many banks are systemically involved in money laundering is not even a debatable fact.
And so if that is the case, then evidently these regulations don't serve the purpose that they are purported to serve, and all the benefit that the modern financial and banking tools could provide to 7 billion people are being withheld in order to just provide those benefits to a much smaller number of people. Another example of this is the way that regulations around investment are being implemented. Section 3 of the Jobs Act under the Obama administration was supposed to liberalize equity crowdfunding in the United States. And the SEC took it and turned it into a 600-page regulation that obviously had the opposite effect of killing equity crowdfunding in the US. Similarly, the New York State Financial Authority worked 2 years to implement the BIT license that was supposed to regulate startups in the crypto space as it applies to financial activities. And the consequence of that horrible regulation was that many startups in the Bitcoin space just left the state of New York, to the point that if you connected to their service in your browser while sitting in Manhattan, you would get the alert: sorry, your geographical location makes it so that we don't want to even show you our homepage. and the US has had the privilege of being in the avant-garde of financial innovation in the 20th century, and it really feels that it is selling the future in order to protect the past.
Absolutely.
It is assuring.
Could not agree with you more.
We are God in the 21st century. So how are we going to achieve what we want in terms of financial inclusion and creating tremendous amount of wealth and opportunity for everybody if this is the case?
Look, when it comes generally to reform of banking around the technologies or innovation of fintech, I would say China is today 7 to 10 years ahead of the United States. The regulatory environment in the United States is debilitating for fintechs. Obviously, fintechs like ourselves and others are trying to work around that, because the US also, in the past historically has been a very healthy environment for investment in the fintech space. But 25% of US households are unbanked or underbanked, and that exists primarily because of regulation around identity. So you have, a large section of these households in the United States, they don't have driver's licenses, they don't have passports that allow them to qualify for opening a bank account. So they have to use alternative financial service providers. They go to check cashers, they use prepaid cards, all of these things that don't require or don't meet the identity requirements for that. So when you look at financial exclusion globally, one of the biggest problems is banks require you to go in, present an identity card, and sign a piece of paper to get access to a basic value store. And that is a functional, it's a dysfunctional piece of the system. If you want financial inclusion, you have to change the way we think about identity. And you have to change the way about how someone qualifies to open a bank account, which is why the likes of M-Pesa in Kenya, MTN Money in Nigeria, GCash in the Philippines, and all of these types of technologies that have exploded on the world scene, not to mention the Chinese system, has started to give us a really different view of the way we should think about identity. That, identity can be tied to your face, for example, and that's much more robust than your mother's maiden name, your social security number, your date of birth, and your address, which in today's day and age, those data points can pretty easily be stolen. So, when we solve identity, ironically, we're also going to solve the problem of financial inclusion. But it does, banks, as you rightly point out, have been trying to game that situation, so they become the sole proprietors of value stores and credit access and things like that, and you have to jump through their hoops. That is what's fundamentally changing.
There are two and probably more U.S. industries that are keeping the world in this straitjacket, and especially the fact that through trade agreements and other means, the U.S. is able to impose its own way of going about these industries to the rest of the world is dangerous. The other industry is the content industry, the Hollywood industry that imposes copyright regimes that are excessively restrictive as well. And a famous example is the 3 a.m. SWAT attack against Kim.com's home
in New
and
Zealand,
private residence in New Zealand, where the prime minister had to apologize for infringing on his right as a citizen, on his constitutional rights, because the entire New Zealand judiciary has been suborned by the U.S. Hollywood industry. And the same kind of leverage is happening in other places as well, including finance. So how do you see another example? Sorry, the FATCA legislation.
Oh, don't get me started on that.
Which just to remind our listeners, there has been a vast conspiracy in aiding and abetting U.S. citizens eluding taxes by opening anonymous accounts in Switzerland and elsewhere. And this scheme has been going on for decades, evidently with everybody knowing about it. And then, for whatever reason, one guy has been able to go about denouncing this in a manner that couldn't be swept under the carpet. And to demonstrate that he was disliked quite significantly is that even though he was under the protection of the whistleblower regulations, he did still go to jail for blowing up this conspiracy. And I met the guy, and he did receive the 100 million payout that was his share of the I don't know how many billions of fines that the bank at the end received. So he did survive. Strike one, good. He did go to jail, which means that he cannot be punished again because no double jeopardy. And
he ended up with 100 million.
And he ended up with a $114 million payment.
Not a bad payday.
I saw the photo of the check. He also wrote a book, The Devil's Banker or something like that.
I will quite well.
Yeah. So that legislation, that act provoked the legislation that now requires all the banks in all over the world to identify if somebody is a U.S. citizen, because the United States applies universal taxation. It doesn't matter where you live. You have to pay the king's ransom. Basically, you are subject to the United States regardless of where you live, unless you renounce your citizenship. And interestingly, that is becoming more and more bureaucratically complicated.
And they can deny you entry to the country
If if you renounce your citizenship.
If they believe that you still, if you renounce your citizenship, but are still, conducting business in the United States, they can say that that's done as a tax dodge, and the IRS can restrict you from entering the country. This is incidentally why I've never become a US citizen, even though I've lived here 10 years. And I don't have a green card either, but for that same reason.
But paradoxically, what happened at the end of all of this, and maybe I was too long in describing it, is that the best fiscal paradise today is a Delaware C corp. Paradoxically, rather than a Swiss anonymous account establishing a corporate presence in the United States in the state of Delaware provides you with a higher degree of anonymity than anywhere else in the world. And at the same time, the rest of the world lives under this schizophrenic, paranoid regime of identifying everybody while not achieving much against money laundering or combating drug lords or whatever else.
This speaks to
what do we do? Because we cannot wage war against the U.S. They have all the bombs, and we are peaceful people. How can we tell the U.S. to please let the world evolve?
Well, I ultimately, the way this will play out, and you saw the friction starting with cryptocurrencies and the efforts by the United States to handcuff these mechanisms. Now, obviously, we could get into the whole argument of centralized versus decentralized and have that, but let's take a more simple view. If you were designing a banking system today, if you were designing a currency today, how would you build it from scratch? First principles design engineering. Well, you'd make it frictionless cross-border. You'd make it real time, and you'd make identity embedded with a transaction if you wanted to stop money laundering and theft of that. You'd have a very explicit audit trail of where a single digital denominated currency unit had been throughout its life history. You'd have rich data on that, and for the purpose of what the US says they're doing factor for an AML. Under the FATF guidelines and so forth, you would say this is a perfect solution. You can't counterfeit cryptocurrency. It has a robust digital identity infrastructure that's highly auditable, immutable, etc. There's every argument you could think of for saying that's the way we should design currency. So the fact that we got pushback against that means that it actually is not about that the US's pushback is all about control. But ultimately, it's a battle they can't win, because ultimately, commerce is becoming global, and value stores are becoming global and cross-borderless. So I think where this really changes is when you have a jurisdiction, maybe it'll be Singapore, maybe it'll be the ECB, maybe it'll be China, where they come out.
Massimo says exactly that.
Right.
He's saying Europe could lead regulation for digital identity and financial inclusion.
But it's more than digital identity, David. Imagine this. Imagine MAS comes out and says, all right, look, we're launching a new type of challenger bank or charter license. And we're launching this along with new digital identity infrastructure. If you can establish that you've done the KYC on a customer digitally and you know who they are, then you can let any customer from anywhere in the world open a bank account in Singapore.
Mm-hmm.
Which is, we're not that far away from that. At that point, essentially, Singapore as a regulatory environment is starting to compete with every other regulator in the world, because they're saying, you're a bank, you open in Singapore, you can have a customer from anywhere in the world have a deposit here. And at that point, either the US makes the entire Singaporean monetary system, illegal, or they say, all right, we're going to have to compete on that same basis. And so you get these regulatory zones starting to compete. And I believe that taxation will similarly follow. I think taxation will end up being real time, and you'll put your business in the most competitive taxation environment, but it won't matter whether you live there physically or not.
So let's go back to that. But to respond to Massimo's remark, I was very positively impressed by the ability of the EU to impose interoperability on a technology basis between banks, to the point where now more and more, and it is required by law, banks allow a single user interface to consolidate the information around many of your bank accounts if you want to do that. And whether that is important or revolutionary in terms of user interfaces is one question. Rather than opening an app after another app, from a single app you can see a consolidated picture of your bank accounts. Very nice, but the substance is what matters. The banks are required to interoperate, and not only in a batch function, with their hulky mainframes, but in real time. Yeah. But in real time. So back to what you just said, what this means is that the financial the pressure on evolving financial offerings is moving the competition into regulatory technology. So RegTech is now the playing field where comparative service arbitrage is going to be played out.
Yes.
And then the next point is how so-called startup societies are going to be able to prove themselves to be worthy. And there is actually now a foundation for startup societies that are incentivizing, and there is a fund created by Patry Friedman that are incentivizing the creation of special economic zones where certain regulatory frameworks can be implemented in order to accelerate the experimentation and the birth of competitive regulatory environments that, just like Shenzhen 20 years ago or 40 years ago, can really create a lot of wealth around the world.
Yeah, Shenzhen's an amazing city. Certainly, I would say the most innovative city in the world right now. I was there. I was fortunate to be there in January before all the shutdown stuff happened. But I've been to Shenzhen, probably 50 times over the years, and it's an incredible place. If any of your viewers have not been there after this all settles down, definitely encourage them to check it out.
So, fintech, RegTech, startup societies, how do you see individuals balancing their lives with respect of nation states in the next 10 years? Because there are societies where this balance is definitely trending towards the group, and individuals are uncontroversially happy to hand over control over their choices to the group. In other places, individuals are proud to make their own mistakes, and they definitely don't want the group to control what choices they can make. And the two examples, quite obviously, are China and the United States, respectively.
Yeah.
So how do you think technology is going to change this power? And is it looked like capitalism was the winning solution 20 years ago, but today
Not
it
so
looks
much
like
now, yeah.
it isn't.
So, like yourself, I'm a techno optimist, right? I believe that technology can solve some of the most intractable problems we have. Certainly, I think technology, automation of supply chain and new technologies in farming, for example, can ensure the entire world is fed. I believe that homelessness can be eliminated by reducing the cost of building a home or a living space. Health tech, I believe that we will live longer and healthier lives as a result of technology. So that's the optimistic side of me. But from a capitalist perspective, the markets have not been incentivized to create those solutions unless someone is paying for them. And so if you look at climate change as an example, one of the problems we have is the market was quite happy to reward the stocks of these massive fossil fuel companies who were obfuscating the truth around climate change and making profit, as long as they made their quarterly returns, right? Instead of the larger social question of, should we be polluting the planet? Should we be raising the temperature of the planet to, have problems with the climate later? Because that wasn't, those social concerns are not embedded in market capitalism, right? And so, that's the flaw of economics. The flaw of economics is it treats you to want to be an individual and to fight against survival of the fittest, as it's been argued. However, the best outcome for the species is clearly that we work together. If you take sort of Aristotelian view of this, what is the purpose of humanity? The purpose of humanity is to thrive and to as a species to become successful. And we can only do that when we have sort of common objectives that we work towards. If you look at the periods of history when mankind have been most successful, where we've made the biggest technological leaps, it's been when we have large groups of people incentivized to work together. So, the world wars are examples of that. But, so is the US space race as an example, where, 4% of the US budget was, dedicated to this goal of putting a man on the moon in a decade. And we did it. We couldn't make that sort of real technological leaps without a sort of a collective view. So I think that's what's going to change out of coronavirus. And if it's not coronavirus that makes that change, it'll be, AI displacing jobs. It'll be, sea rise from climate change, food distress from climate change and so forth. We have the technology to do this. We don't have the will right now because of this obfuscation around this, you as individual and your rights versus the rights of society. So that's why I think that emerging out of this chaos is a world where, both from a technology perspective and an organizing principles perspective, we become more of a species. We become more collectively oriented in producing these goals. Because the more we remain divided, the less functional we are as a species.
And yes, we share this optimism in the sense that technology enables that to happen. However, technology is not a guarantee. And in the past, we have proven to be stupid enough to make choices that are dramatically wrong. And so what we need is to maximize those outcomes that share opportunities for the largest number of people. What I often say is that during the French Revolution and in the past, the blunt instrument of wars and revolutions were the only ones available to resolve the mounting social tension represented by the difference between what was possible, what was becoming possible thanks to technology, and what the existing social organization enabled people to enjoy. Well, when the French monarchy was decapitated, literally, that was a very, very bad outcome for them. So, whatever is your favorite conspiracy theory of whoever is running the world, please tell them not to worry. Because if only we release the tension by enabling new experiments to be carried out and then embrace the best ones, regardless of where they are discovered, it means that you don't need to be decapitated. And I think that should be your goal rather than, embracing your crown jewels until the guillotines show up.
So I'll tell you about how I do it, how I frame this in techno-socialism. There's, in terms of sort of the organizing principles, I look at sort of four broad potential futures that we have. And so when you're looking at the potential futures, you can get, you can sort of take a dystopian or utopian view where we get this sort of stuff sorted out. But the other angle is to look at inclusiveness and exclusiveness, because that's really what we talk about. When you talk about an individual over the whole, we're really talking about a problem of exclusionary policy, right? So, and when we talk about financial inclusion and all of that, it's all part of it. So I came up with four possible futures. And these are based on a sort of a magic quadrant sort of style, with exclusionary and inclusionary, and utopian and dystopian, based on sort of technology adoption. And the four future states that are possible are the ladder stands. So this is capitalism has largely failed, but no new distinctive system has emerged. AI, science, and technology has largely been rejected. Limits on technologies placed into law to keep humans employed and relevant. So that's one possible scenario. You have the failed statistan, right? Or faildistan. We responded too late to climate collapse. We initiated a global depression over decades, hundreds of millions of displaced workers, immigration and resource wars happen, and we have general autocratic rule. We have neo-feudalism, which is enclaves of rich living in walled cities, massive inequality, but they have access to all this technology that gives them this, gives them longevity, and they basically have this technology ownership through wealth capture. The best outcome, however, is techno-socialism, right? Which is highly automated technology-based society with broad equality and prosperity, ubiquitous technology infrastructure for health, education, transportation, food, and housing. So they're the four choices we have based on the trajectory we're going. Which would you choose if you were architecting the future? Well, you might say the wealthy elites would choose neo-feudalism. The lessons from history, Will Durant, David Brin talks about this. The fact is, throughout the vast, history of humans, it's been dominated by wealthy elites ruling, the 1% ruling the 99%. But if you want an equality-based system with technology really serving us to benefit us, then you need inclusiveness, which leads to techno-socialism. So they're the most two likely outcomes, I think, of these developments, David.
And while you were speaking, I tried to draft a slide.
I will send you I'll send you an image of that from the book, okay?
Because
there's I don't know if you can see it. There's
one sec, stay there. Yeah. Okay, but
and in terms of the graphic behind it,
because it needs to show,
that's the organizing principles.
Oh, okay. All right. Fantastic. So this is a sneak peek of your new book.
Correct.
So Emiliano is asking, is one world currency possible? And my answer is yes, but greatly undesirable.
Yeah, look, I actually love his question about Mars, because let's take a first principles design approach. If you're building an economy on Mars, would it look like the economy of the United States or China?
Oh, no way. It is
Absolutely
more
not.
China-like.
Right. Yeah, it's more like China.
One of the reasons is because in order to survive,
Collectivism.
the cowboy style conquest of the West is not possible. The Hollywood movie, the first Schwarzenegger version of Total Recall,
Yeah, Total Recall, yeah.
where there is this kind of French Quarter of Wild West locals, is naive and laughable,
Yes.
because it supposes the availability of an ecological support system that is not there on Mars,
Correct.
unless we radically recycle everything. We just can't survive. A better representation is in Andy Weir's book Artemis, about the moon and the moon colonies.
But even a better one is Kim Stanley Robinson's The Martian Trilogy, right? Because he talks about this eco-poetics, right? Sustainable prosperity as the goal for Martians. And so this is where it circumvents these national boundaries. We start with these nation colonies, but then as Mars becomes a sort of a nation state competing against Earth, trying to get its independence from Earth, what emerges is this new sort of system which tries to accelerate Mars independence and self-sustainability. And so what you get is people basically saying, you get assets, you have wealth by more energy you put into the system. So if you're a user of resources in the system, you're penalized, you're in debt, right? The way you become wealthy in that system is by putting more back into this self-sustaining society than you take out of it. And, really interesting organizing principle, but would lead to a much better sort of collective approach. But maybe it's too socialist.
One of the consequences of the pandemic has been that a lot of dogmatic presuppositions have been eliminated from both individual and common thinking, and previously blasphemous statements are now possible. The U.S. is now seriously implementing universal basic income on a limited time scale, because whether it is a $1,200 check or whatever it is being sent, and it is not universal enough because not everybody gets it, and we don't know how long it is going to last. But last year, if somebody said that
it would have been unheard of. It would have been
Trump
ridiculous.
would send a check and proudly sign it with his name unconditionally to everybody, it was
you're smoking something. Yeah,
it was anathema. So that means that this is the time to be radically reforming in the kind of thinking and the kind of leadership in order to take advantage of this shock that all of us are living under, and really say, okay, are you in to try this experiment? And a lot of people will say, yeah, let's do it, and then see what happens. And the more diverse these experiments are, the more likely that we will find solutions that otherwise we wouldn't have. But it also means that a single solution is not going to be implemented and adopted by everybody, which means that there is not going to be a single world currency.
I think you need to think of it, the way you need to think of it, Emilio, is it's like language, right? Is that in the future, it won't matter that we don't all speak the same language, because we'll have the technology instantly to translate languages. So it won't matter in the future what currency you have, whether it's a fiat currency or cryptocurrency. Your wallet based with an AI will be able to sort it all out. So the actual underlying value of the currency or the value exchange, there may be some arbitrage in that, but ultimately your wallet will sort it all out.
When I was living in Hungary under the communist regime, the Hungarian forint, the local currency, was not convertible. And what that means is that you could buy goods and services in Hungary paying with the local currency, but when you went anywhere else and you showed them your money, they said, "What is that? Please, I don't want it. I want to have nothing to do with it." So there was no interoperability unless the central authorities agreed that there would be. And now the name is the same, but the Hungarian currency is convertible. Now, in the future, there will be no such a thing as a non-convertible currency because the code running the currency is going to be able to talk to some other code. And you may not like the outcome because you thought you were wealthier. Then it ends up the other system will recognize your wealth to be corresponding to. But it is never going to be the case that you end up with a bunch of banknotes that others won't take.
Well, it might be even more fundamental than that. We may return to a form of bartering. You know, I can see, for example, an Uber driver bartering hours on the Uber platform, you know, with sort of a common driver sharing thing for apartment space, living space, or, you know, for groceries and things like that. Again, you know, once you have the right technology in place, you're really not restricted in terms of these types of value exchange mechanisms you could create. It does certainly weaken the position of central banks and fiat currencies unless they're highly frictionless. So it'd be interesting to see, you know, the Chinese, you know, digital currency that they're working on and so forth. It'd be interesting to see the sort of changes that happen as that becomes more accepted. Will that weaken the petrodollar domination, especially as, you know, as fossil fuels become, you know, a much more minor part of global commodities trade? You know, there are a lot of real questions about how money develops, but I do think that it all comes down to, you know, what sort of dominates this in the future is not who's got the best currency, but really what's the best value exchange framework and mechanism.
So there are a lot of things that we didn't touch upon today, and I hope that
there's a lot of things we did though.
you can come back to talk about
of course.
more. In the meantime, I want to remind our viewers that just as I was browsing and sharing, these links are going to be posted in the show notes on all the platforms. So you will be able to get in depth both about Brett, and I want to share that Brett not only has many books, but he also has a very popular podcast.
The #1 fintech radio show and podcast, Breaking Banks.
Very good, very good. And I was happy to be a guest a couple of times there too. And so you will be able to get the details of everything we discussed and hopefully learn, and very importantly, hopefully act. Open an account in one of these new leading banks, open a Bitcoin wallet, doesn't matter where, get your hands dirty in the world of fintech, because your knowledge, your actionable knowledge, is what is going to represent your wealth in the future.
Awesome. Thanks, David, for the opportunity. I appreciate it.
Thank you. Thank you very much for being with us. So I want to thank our viewers for being with Searching for the Question live today. If you know Italian, you can actually subscribe also to my Italian channel, because I have an Italian show, and the easiest is to go to davidorban.com/YouTube Italiano. And once again, I want to remind you that on patreon.com/David Orban, you can choose to become a supporter, a patron, to make sure that I can keep producing this together with my team and have wonderful guests like today with Brett here. So thank you very much, and see you in the next episode tomorrow. Let me tell you who we have. No, it's not going to be tomorrow. The next guest is going to be Dmitry Paranushkin, talking about topic discovery, AI approaches to understanding what are we talking about, and trying to accelerate the way we can absorb information. It will be very, very interesting. So see you at the next episode. Bye-bye.